Okay, so our topic for today, class, would be PFRS 8, the standard governing your operating segments. PFRS 8 class is one of the few standards class that is not for general or mass application class. PFRS 8 is very limited to uh, a few entities, okay, which we will discuss later on. And you will understand why, because operating segments really is just uh, providing additional disclosure. This will not have an effect on the statement of financial position. This will not have an effect on the statement of profit or loss class. PFRS 8 will tell us what additional disclosures, what additional information will be provided in the notes to the financial statements class. So this would have an effect on the notes to the financial statements, but not on the other financial statements class. Okay, and it will be understandable why this is not for everyone, why this is not to be observed by all entities class, because not all entities will have segments class, will not have reportable segments. Not all entities are big enough to have different operating segments. Okay, so basically, this would be applicable for uh, big entities that are being publicly traded. Okay, but before proceeding as to the coverage of the standard class, just very quickly, uh, the core principle for PFRS 8 is the requirement that an entity shall disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which it engages and the economic environments in which it operates. So again, as I've mentioned, this would become relevant only and significant when we're dealing with entities class that are engaged in different kinds of operations, that are engaged in different types of activities that may not be similar in nature. Okay, they may be engaged in uh, different industries. Okay, and for that to happen, then definitely the entity has to be of a significant size class. So again, very important to remember, while this may be an interesting topic class, this is not for general application. This is not to be observed or applied by all reporting entities. Okay. So paragraph 2 tells us as to whom uh, PFRS 8 will apply. Okay. And if you'll see uh, subparagraph subparagraphs A and B here, they are very similar class. Okay, those whose debt, meaning they have bonds that are issued to the public, or equity instruments are traded in the public market. Okay, or those who are still in the process class, for those who are still intending uh, uh, to become to issue, those who are still in the process of issuing their debt or equity instruments in a public market. Okay, so two takeaways for the scope of PFRS 8. Number one, it will be applied to both the separate financial statements and the consolidated financial statements. More on this in a short while. Second takeaway for the scope, this will only be applicable for entities who already have debt or equity instruments that are already being traded in a public market. Okay, and it may even be in a domestic or a foreign stock exchange. Okay, but not just those who already have existing debt or equity instruments that are being traded in a public market, but all could but PFRS 8 is to be applied as well to those entities who are still in the process of having a debt or equity instrument traded in a public market. Okay, so basically you can view the scope in those two ways: applicable for separate financial statements, applicable to consolidated financial statements, and applicable to whom? Entities who have existing or who are planning, who are in the process of having their debt or equity instruments traded in a public market. Okay, so especially if you only have a family corporation class, a closed corporation, then definitely, yeah, you will not have to apply your You will not have to apply PFRS 8. Okay. Now, just to give an idea what we mean by separate or consolidated financial statements. Okay, going back to the this to your readings in conceptual framework class. Okay, remember that there's a possibility wherein one entity would be related to another entity in a parent and subsidiary relationship. Uh, in this case, let's say, for example, class, we have company A and company B. Company A is a majority shareholder of company B. So, in some essence, you can say that company A has control over company B. That company A is the owner of company B. So, as far as accounting is concerned, class, there are actually three reporting entities that exist. Not just company A, not just company B, but in the eyes of accounting, there are three reporting entities involved in this relationship. You have company A alone and company B alone, and the consolidated entity, which will comprise the company A, the parent, and company B, the subsidiary. Okay, so basically, PFRS 8 is telling us that you will have to apply PFRS 8 in the preparation of the financial statements of company A alone. Okay, in the preparation of the separate financial statements of company A. But PFRS 8 will also have to be applied in the preparation of the consolidated financial statements. Okay? The preparation of the financial statements of the consolidated entity, the entity that comprises company A, the parent, and company B, the subsidiary. Okay? So you will have to apply it whether you are preparing the separate financial statement of the parent or you are preparing or the separate financial statement of the subsidiary, or but you will also have to apply PFRS 8 if you are now preparing the consolidated financial statements. Okay. Uh, but paragraph 3 tells us, class, that if an entity that is not required, uh, sorry, in paragraph 4, it tells us that if a financial report contains both the consolidated financial statements of a parent that is within the scope of PFRS 8, as well as the parent separate financial statements, then segment information is required only in the consolidated financial statements. Okay. So earlier we have established that if you are preparing the separate financial statement of the parent class, uh, of the parent or subsidiary, then you will also have to prepare, or you will also have to apply PFRS 8. If you are preparing the consolidated financial statements of the consolidated entity, then you will also have to apply PFRS 8. But paragraph 4 tells us now that if a financial report is presenting both the consolidated financial statements and the separate financial statement of the parent, then you need not provide segment information for both. Provide segment information only for the consolidated financial statements. If you do it for both, class, then it will only result in a redundancy. Okay. Going back to paragraph 3, if an entity that is not required to apply the IFRS, to apply PFRS 8, chooses to disclose information about segments that does not comply with the standards, it shall not describe the information as segment information. So basically, this is just to avoid uh, misleading the financial statement users. So if the information that you're presenting about your segments is not compliant with PFRS 8, then do not call it or do not refer to it as segment information. Okay, you may call it some other name, but do not refer to it as your segment information. Then you might ask, uh, I thought the standards are mandatory. Why is there a scenario wherein the information provided about the segments do not comply with the standard, do not comply with PFRS 8? Okay? Please understand that the scenario contemplated in PFRS 3 is in the first place not covered by PFRS 8. So even though it does not comply with PFRS 8, so the scenario here is it is not covered by PFRS 8, but it is still presenting information about segments. Okay, and since the entity is not covered by PFRS 8, it is possible that the information that it is presenting will not be compliant with PFRS 8. And that is the very reason why the standard tells us not to refer to this information as segment information, because you did not comply with PFRS 8 in the first place. Okay, so to avoid any confusion, you may present information about those segments, but do not refer to them as segment information. Now, of course, PFRS 8 tells us that the entity should provide information about its segments, but provide information about its operating segments. So the first issue we have to hurdle would be to determine what are operating segments. Okay, but it actually does not end there. After determining what are operating segments, class, what parts of the entity can be considered as an operating segments. The second issue to settle would be which of these operating segments are reportable. Okay, number one, again we have to understand that we are required. PFRS 8 requires the covered entities to provide information on its operating segments. Okay, so the first thing to settle would be to determine which parts of the entity can be considered as an operating segment. Okay, so please understand that not all individual parts of an entity can be considered as an operating segment. Okay, so if they are not considered an operating segment, then definitely there is no requirement for us to provide segment information for them. Okay, number two, again, number one, not all individual parts of the entity are operating segments. Number two, not all operating segments are reportable. Okay, so while PFRS 8 requires information to be provided for operating segments, it does not require the entity to provide information on all operating segments. So after determining our operating segments, class, we also have to determine uh, which of these segments are reportable. And there's a criteria provided in the standard. But before going there, let's settle first. What then can be considered as an operating segment? What component or which component of an entity can be considered as an operating segment? Okay, and we have here A, B, and C class. Okay, A, those that engages in business activities from which it may earn revenues and incur expenses. Okay, so please understand that we are providing information about our operating segments. So these components of the entity must have operations class for them to be considered as operating segments. And of course, if you have operations, then definitely you earn revenues and incur expenses. Okay. Second, those whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions and resources to be allocated to the segment and assess its performance. Okay, so it's not enough that you have revenues class and you incur expenses. Uh, these component of the entity class must also be reviewed by the chief operating decision maker in making decisions as far as the allocation of resources is concerned, class. Okay. Basically, the goal here, class, is to put the financial statement users close to the same footing as the chief operating decision maker of an entity, so that basically we are giving access to the public information that is regularly reviewed by the chief operating decision maker. Okay. Uh, we will talk about more as to who is this chief operating decision maker class. Okay, but you'll also have to understand that we are dealing with an entity here class whose debt and equity instruments, whose bonds and shares are being traded in a public market. So there's really a reason for us to become more transparent to the public, because uh, because they are now deriving capital from the public class. So, in the interest of protecting the investing public, certain standards, which includes PFRS 8, are being uh, made mandatory to provide more information to the investing public. The main reason that we are requiring more information to be disclosed by the covered entities class is so that the investing public will be protected. Okay, if you'll go over the criteria here, it's as if we are putting uh, the investing public close to the same position as far as decision making is concerned to the chief executive of the uh, entity. Okay, third, for which discrete financial information is available. Of course, if information is not available, then there will be it would be close to impossible for us to provide segment information for these components. Okay, uh, an operate important to note would be that an operating segment may engage in business activities for which it has yet to earn revenues, class. Okay, especially for startup operations. This can still be considered as operating segments, even though they have not actually earned revenues, class. They can already be considered as operating segments. Not every part of an entity is necessarily an operating segment or part of an operating segment. Uh, you Please take note of this example, class, because you might be asked which of the following can be considered as will be considered as an operating segment. Okay, a corporate headquarters, okay, or some functional departments may not earn revenues or may earn revenues that are only incidental to the activities of the entity and therefore should not be considered as operating segments. Okay, we're given with an explicit example here, class. An entity's post-employment benefit plans are not operating segments. Okay, so for pension funds, class, for pension funds maintained by the company, definitely these will earn revenue because the purpose of having a post-employment benefit plan is for it to generate sufficient money to pay off the employees once they retire. Okay, and of course, it will also earn expenses for those that are managing the post-employment fund. Okay, but the standard is telling us that this will not be considered as an operating segment. Okay, now the term chief operating decision maker identifies a function and not necessarily a manager with a specific title. So this does not pertain to a title, class, but basically the function it performs. Okay, so you will be considered as a chief operating decision maker if your function is to allocate resources to and assess the performance of the operating segments of an entity. Okay, so if your function is to review a performance of a component of an entity for the purpose of deciding as to how much resources will be allocated to it, then you will be considered as a chief operating decision maker as far as PFRS 8 is concerned. And our chief operating decision maker will normally be the CEO or the chief operating officer, either the CEO or the COO. Okay, but in some cases, class, it could either be a management team or a group of executive directors. Class, again, you inquire as to the function and not the title. Now, paragraph 8 tells us that an entity may produce reports in which its business activities are presented in a variety of ways. Okay, if the chief operating decision maker uses more than one set of segment information, other factors may identify a single set of components as constituting an entity's operating segments. So what this tells us, class, is that while PFRS 8, paragraph 5 tells us as to the uh, criteria or qualifications for a component to be considered as an operating segment, class, the chief decision maker, class, or the entity is empowered of identifying certain components as an operating segment, even though it does not fall squarely with the criteria presented in paragraph 5. Okay, so it now depends on whether or not the chief operating decision maker reviews its performance, class, for the purposes of evaluating whether resources should be allocated to it for subsequent periods. Okay, so again, we have these three criteria, but the reporting entities are empowered to take into account other factors in identifying operating segments. Okay, so you can say that in some ways this can be considered as discretionary. The ultimate goal is that the information that is being assessed by the that is being reviewed by the chief operating decision maker will be also uh, made accessible to the investing public. Okay, so you are also expected to be familiar with the term segment manager class. As far as financial preparation of disclosures are concerned, the terminology is of little significance, but you must you must be conscious already by now that questions in the examination could focus on terminologies. Okay, so the term segment manager, similar to uh, chief operating decision maker, does not refer to a title, but it identifies as a function. Okay. Uh, the chief operating decision maker may be the segment manager for some operating segments. A single manager may be the segment manager for more than one operating segment. Okay, this could also possibly be the first time you're encountering the matrix form of organization class, but that should be more of a concern of your business administration classes and not for our subject class. Okay, now after identifying who are which are our operating segments, next issue would be which of these segments will be reportable. Okay, which of these segments will be uh, reportable. Paragraph 11 class tells us that an entity shall report separately information about each operating segment that has been identified by the criteria and or results from aggregating two or more of those segments in accordance with paragraph 12, and for those who exceed the quantitative thresholds. Okay. Let's proceed to paragraph 13 first. Okay. So paragraph 13 class would help us determine which of our operating segments will be reportable, meaning we will provide information for these specific segments. Okay. But if we go back to paragraph 12, this would tell us that it's possible for us to aggregate small segments class, or even not just as to their size. Okay, if there are similarity as to their economic characteristics class, certain operating segments may be aggregated into one. Okay, but again, let's go to the second main issue. Okay, which of the operating segments will be considered as reportable? Okay, and we have three criteria here, class, and it's always 10%. This would be interesting for when you solve problems in the future class. Okay, the issue would be how many of the operating segments will be considered as reportable segments. Okay, first criteria. Okay, because you do not have to hit all these three criteria, class. You just have to qualify in any of the three. Okay, so we can discuss them separately. Letter A, its reported revenue is 10% or more of the combined revenue of all operating segments. So how do you do the test here to determine whether a segment qualifies as a reportable segment? So for letter A, class, you just list down all the revenues of all your operating segments. Okay? So if you have identified 10 operating segments class, segment A to J, okay? And you determine their revenue, how much revenue or sales do they have, okay? Then you list them, all 10 of those segments, then you add all the revenues of the 10 segments. Sorry, let's not use 10 segments class because it will be confusing since we'll be using 10%. Let's just say we have 8 segments class. So that would be uh, segment A to segment H. Okay, so you add the revenues of segment A with the revenues of B, C, D up to H, and you get the total class. Okay, you get the total. Uh, then once you have the total of all your operating segments, you get 10% of the total. Okay, you get 10% of the total. So let's say if the total class is 10 million, if the total is 10 million, you get 10% of the 10 million, and that will, sorry, again, let's not use 10 million because we will be using 10 in a lot of instances. Let's say 15 million. The total of the revenues of segments A to segment H amount to 15 million. You get 10% of the 15 million, and that will give you 1.5 million. And you use this 1.5 million class, you use this 1.5 million to compare with the individual revenues of the 8 segments that we have. If the revenue of segment A uh, is equal to or more than 1.5 million. Again, what is this 1.5 million? This represents 10% of the total revenues of all the 8 segments. So if the revenue of segment A, if the revenue of segment A is equal to or greater than 1.5 million, then segment A will be considered as a reportable segment. If the revenue of segment B is only 800,000, then segment B will not be considered as a reportable segment as far as this criteria is concerned. Okay, understand that even though it may not be a reportable segment under these criteria, segment B can still be considered as a reportable segment if it qualifies in the other criteria. Okay, again, there are 3 criteria class. As long as you will qualify in any of the 3, you will be considered as a reportable segment. But in our example, segment A qualifies under the revenue criteria, so we will be providing segment information for segment A. For segment B, it does not, the revenues of segment B does not reach the 10% of their combined or their total revenues. Then for the first criteria, segment B will not qualify. Okay, and that's it. That's the first criteria. You add all the revenues for all your segments, you get the 10% of the total, and you simply compare that amount with the individual revenues of each segment. If it is equal or greater than, then it qualifies as an reportable segments. It qualifies as a reportable segment. If it is lower than the 10% of the total of the revenues of the operating segments, then that will not be considered as uh, reportable segment, as a reportable segment. Okay, so the first criteria is somewhat very simple, class. What will confuse students, class, would be the inclusion of the phrase here, including both sales to external customers and inter-segment sales or transfers. Okay, so for the students who did not read enough, class, when the problem will now try to confuse them, the revenue of segment A is 1.5 million, but this 1.5 million includes sales to the other segments. Okay. Now, even though the standard does not discriminate, class, even though it does not matter whether the revenues reported by the segment includes sales to other segments, class, okay, but for a student who did not study well, they would now entertain the idea, perhaps the revenue that I should be using should only be those revenues or sales to outside parties, to external customers. Okay, but if you simply read the standard, class, it does not actually care to whom the sale was made, as long as it is reported as a revenue by this operating segment. Okay, so that's why when I discussed this earlier, we did not touch on the source of the revenue. Okay, because it does not matter. Okay, so in case the problem will give you information as to the source of the revenue, whether the revenue is from an outside party, from an external customer, or the revenue represents sales to another segment, it does not matter. Okay, the revenue that you will use in adding up all the revenues of the segments will include external and inter-segment sales. Okay, so please remember that it does not matter to whom the sales were made, class. Okay, if that's the revenue prepared by the entity, the segment, then that would be the revenue that we will use. Okay, so in case the problem will separate, class, will present information for revenue to external customers and to other segments separately, then what should you do? You combine them because it should be the total. Okay, it does not matter to whom the sale was made. Okay, that's one of the things. That's one thing you have to take note under the revenue criteria class. Okay, let's proceed to the third criteria. Let's skip the second criteria first because this is where students get confused. The third criteria is as to the assets class. Similar to revenues, this is what we do under the third criteria, the asset criteria. You get the assets attributable to each segment. Okay, you add all of them for all the 8 segments class. Okay, and then you get 10% of the combined assets of the 8 operating segments that we have. If the assets of segment A, if the assets of segment A is at least 10% of the combined assets of all the operating segments, then that segment, in this case, segment A will be considered as a reportable segment. Okay, but it does not matter because in our illustration earlier, segment A already qualified as a reportable segment. Okay, but in applying the other criteria class, you do not exclude those that have already qualified in the under the other criteria class. Okay, it should always be all the reportable, all the operating segments. So even if segment A qualified already under the revenue criteria, in determining the threshold under the asset criteria, you will still include segment A. Okay, because there is no priority here, there is no order of preference. Okay, you will have to apply this criteria to all the segments, to all the operating segments. So again, the asset criteria is very simple. You line up all the assets attributable to all the segments, you add all of them, get 10%. Okay, and if the assets of the individual segment is equal to the 10% or greater, then that segment will be considered as a reportable segment. Okay, so what we're doing here is we're just trying to identify the segments that will qualify. Now let's go back to uh, the second criteria, which is the profit or loss criteria class. Okay, uh, I hope at this point you already understand the difference between revenue and profit class. Huh? Revenue is your sources of income. Okay, compared to your profit or loss, this is your revenue less all the expenses already. So definitely you would expect revenues to be greater than the amount of profit or loss. Okay. Now, the second criteria, the profit or loss criteria class, is somewhat confusing because you will have to segregate class. Segregate the segments reporting a profit and the segments reporting a loss. Okay. So for simplicity class, assuming out of our 8 segments, 5 reported a profit, 3 reported a loss. Okay. Let's say A, B, C, D, and E reported a profit. F, G, and H reported a loss. Okay. Unlike in the revenue and the asset criteria class, you just add all of them. Here in the profit or loss criteria, you have to segregate first. Those reporting profits and those reporting loss. Okay. Okay. So in our example, A, B, C, D, and E reported a profit. We'll put them on one side. F, G, and H reported a loss. We'll put them on another side. What we do is we add all the profits, we add all the losses. So we get the total profits for segment A, B, C, D, and E. Okay. And we also get the total loss of segments F, G, and H. Okay. And supposedly, class, the rule is you get the 10% of the totals of these two. You get 10% of the total profits. You get the 10% of the total loss. And what you're supposed to do is to compare which of the 10% is greater in absolute amount. Okay? It's important that the standard use the term absolute amount class, because if we're comparing a positive and a negative amount, then the positive amount, the profit will always be greater. But in this test, we will be comparing their absolute amount. So it's possible that it will be the loss that will be greater than the uh, that will be considered as greater than the profit. So again, first step under the profit or loss criteria is to segregate those reporting profits and those reporting a loss. You get the total for the profits, you get its 10%. You get the total of those reporting losses, you get the 10%. Then out of these two 10%, you compare which one is higher in absolute amount. Okay? That's the procedure. But of course, class, we know that the 10% of the if the profit is greater than the loss class, then the 10% of the profit will also be greater than the 10% of the loss. If the total loss is greater than the total profit, then of course the 10% of the loss will be greater than the 10% of the profit. Okay? So for me, there's no need for you to get the 10% twice. After getting the total profit and the total loss, you already compare which one is greater in absolute amount, the total profit or the total loss. Once you have determined that it is the total profit that is greater, then you only get its 10% and ignore the total loss. Okay, and you will use that already. The next question is, how do you use the 10% of the greater amount? You will now be comparing that to the profit or loss reported by the segments. Okay, so let's say, for example, class, uh, total profit of segment A, B, C, D, and E is 600,000. Total loss of uh, segment F, G, and H is 200,000. So again, total profit is 600, total loss is 200. Which one is greater in absolute amount? It is the total loss. So we will be using the 600,000 as the basis of our threshold. We get 10% of 600,000, you will have 60. And how do you use the 60,000? You now compare the 60,000 with the profit or loss reported by segments A, B, C, D, E, F, G, and H. Okay. So if the profit reported by segment C is greater than 60,000, 60,000 being the 10% of the total profit, then segment C will be considered as a reportable segment. If the profit reported by segment D is only 40,000, then segment D will not be considered as a reportable segment under the profit or loss criteria. Is that clear? Sorry. I hope that's clear. Now, the confusing thing now for students is that how do we check whether the segments who reported a loss are reportable or not? Okay, so you will still use the 60,000. Again, the 60,000 is 10% of the total profits of all the segments reporting a profit. So even though the 60,000 is based on those reporting profits class, since the 60,000 is the higher amount, you will also use the 60,000 in comparing it with the losses reported by the segments that had a loss. So for example, if segment F reported a loss of 70,000, if segment F reported a loss of 70,000, applying these criteria class, segment F will be considered as a reportable segment. Why will segment F be considered as a reportable segment? Because its loss, the absolute amount of its loss, which is 70,000, is higher than our threshold of 60,000. Okay. If segment G reported a loss of 40,000, since the absolute amount of 40,000 is lower than our threshold of 60,000, then segment G will not be considered as a reportable segment. Okay. Common error on the part of the students is that if you remember, the total of our profits is 600,000 and the total of our losses is 200,000. Common mistake of the students is they would get the 10% of the 600,000, which is 60,000, and they will only apply it to test the segments reporting a profit. Okay, and what will they use to test the segments reporting a loss? They would get the 10% of the 200,000. They would get 10% of 200,000, which is 20, and they will now use it to test you. They will now use it to test the segments that reported a loss. That's wrong. You will only be using one amount class in testing both segments that reported a profit or a loss. Okay. So you choose between the total profit and the total loss, whichever is higher, you get the 10%, and you use that to test both, to test that on all segments, whether they reported a profit or a loss. Okay, if the total loss was higher class, you get the 10% of the total loss, and you use that to test the segments that reported a loss and also the segments that reported a profit. Only one amount will be used. Okay. But of course, that will become more relevant when you are dealing with problems class. The only thing required of you now is to know the existence of the profit or loss criteria, the revenue criteria, and the asset criteria. Nothing confusing for the asset criteria. For revenue criteria, understand we do not discriminate whether it's to outside parties or sales to other segments. For the profit or loss criteria, again, segregate first those reporting profits and those reporting a loss. You get the total profit, you get the total loss, compare the two amounts. You use the higher amount in absolute value, you get the 10%, and you use that 10% to test on all the segments, regardless of whether they reported a profit or loss. Okay. So going back, we have a criteria as to which components of the entity is considered as an operating segment. Next, you apply the criteria in identifying which of the operating segments will be considered as a reportable segment. Okay. Now, continuing class, this tells us that operating segments that do not meet any of the quantitative thresholds may be considered reportable and separately disclosed. Okay, if management believes that information about the segment would be useful to users of the financial statements. Again, discretion on the part of the management. So even if you did not qualify under any of the three criteria, if management believes that information about that segment is useful, then that segment will be considered as reportable, and therefore information will be provided for that segment. Okay. And then an entity may even combine information about operating segments that do not meet the quantitative thresholds with information about other operating segments that do not meet the quantitative thresholds to produce a reportable segment only if the operating segments have similar economic characteristics. So you will be combining the revenues or assets or profit or loss for smaller segments for them to qualify the quantitative thresholds. Okay. And you will have to apply the aggregation criteria in paragraph 12. Okay. In paragraph 12, this tells us two or more operating segments may be aggregated into a single operating segment if aggregation is consistent with the core principle of the IFRS, which is to provide useful information to useful segment information to financial statement users. Okay. But paragraph 15 class is very important. Aside from those that will qualify class, aside from those that will qualify in the three criteria class, the profit or loss criteria, the revenue criteria, and the asset criteria, and aside from those that will be added by the management class, okay, the standard tells us that the external revenue of all those considered to be reportable segments must constitute or represent at least 75% plus of the entity's revenue. Okay, so meaning if the external revenue class, if the external revenue of those that have already been identified as reportable segments class is less than 75% of the entity's revenue, then the entity is required to nominate additional reportable operating segments to the point that it will now reach 75%. Okay, so you already have done the profit or loss criteria, asset criteria, revenue criteria, but it so happened that the external revenue of these segments that have qualified under our quantitative thresholds do not represent 75% of the entity's revenue, then what is required? Nominate additional reportable segments class to the point that it will now reach at least 75% of the entity's revenue. Okay. But in checking the 75% class, in checking the 75%, it should only be the external revenue. And this is what makes students confuse some more. Because in checking the 75%, we only consider external revenue. But remember, in the 10% test class, in the 10% revenue test, it should include uh, external and internal or inter-segment sales class. Okay. The use of the external revenue is only for determining the 75 threshold. If you whether or not the qualified segments have reached 75% of the entity's revenue. Okay. So please take note. You have three 10%, but make sure that those that qualify under the 10% must represent at least 75% of the entity's revenue. Okay, 17, if management judges that an operating segment is identified as a reportable segment in the immediately preceding period, is of continuing significance, information about that segment shall continue to be reported even though it no longer meets the criteria in the current period. Last year, it was considered as a reportable segment. This year, it did not qualify. It did not satisfy our quantitative thresholds. Then, information about that segment can still be provided in the current year. Inversely, we have in paragraph 18, if an operating segment is identified as a reportable segment in the current period, but in the previous period it was not a reportable segment, then we will have to restate the information from the previous period so that there will now be a comparative information provided for the segment that has become a reportable segment only this period. Okay? So to simplify, class, in paragraph 17, it was reportable before, not reportable now. You can still treat it as a reportable segment here. You can still provide information about that segment, even though it does not qualify anymore. Paragraph 18, it was not reportable before, it is reportable now. So we are required to provide information for that segment this period. But since we are also required to provide comparative information, then we will have to restate, we will have to change the information for operating segments from the past year to make it appear that the segment that has become reportable this period was to make it appear that it has also been reportable in the previous period. Okay, so paragraph 18 is more cumbersome than paragraph 17. Okay, as to the disclosure requirements class, very little issue here. An entity shall disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which it engages and the economic environment in which it operates. Okay. So the major group of information that must be provided would be general information as provided down below, information about segment profit or loss, and reconciliations of the totals of segment revenues and profit or losses. Okay. Again, you're not expected to memorize this. Okay. Information about profit or loss, assets, and liabilities. An entity shall report a measure of total assets and liabilities for each reportable segment if such amounts are regularly provided of the chief operating decision maker. Plus, this phrase class would be recurring throughout the rest of the standards. If such amounts are regularly provided to the chief operating decision maker. Remember, our goal is to give access to the investing public information close to what the chief operating decision maker has access to. Okay. Here, an entity shall disclose the following, shall disclose information if the specified amounts are included in the measure of segment profit or loss reviewed by the chief operating decision maker. Okay, always conditioned on the fact that this is being given or reviewed or provided to the chief operating decision maker. Okay, you have these items. Here again, we have if the specified amounts are included in the measure of segment assets reviewed by the chief operating decision maker. Again, this is a recurring scenario here. So for measurement, again, you do the same only if they are included in the measure of the segment's profit or loss that is used by the chief operating decision maker. Okay, so again, a recurring theme. Okay, if the chief operating decision maker uses only one measure of an operating segment's profit or loss, the segment's assets or the liabilities, in assessing segment performance and deciding how to allocate resources, then segment profit or loss, assets, and liabilities shall be reported at those measures. So again, the same standing. Let's put the investing public almost in the same standing as the chief operating decision maker. Okay, then of course reconciliations will have to be made, but you are not expected to memorize this. Okay, but this is very understandable why information is to be provided for this one. Okay, just one more thing. If an entity changes the structure of its internal organization in a manner that causes the composition of its reportable segments to change, the corresponding information for earlier periods, including interim periods, shall be restated. So similar to what we have discussed before, that before it was not a segment, reportable segment, now it is a reportable segment. Change the information from the previous period to make it appear that the reportable segment now was also a reportable segment, to make it appear that the reportable segment now was also a reportable segment in the previous period. Here, if there are changes in the reportable segments, also make a restatement in the previous period's financial statements. Entity-wide disclosures. Again, this is not a, but it's important for you to go over this one class, as this may be a source of a true or false question. Okay, you are expected to give information about the products and services, about geographical areas, but just one more thing, class, information about major customers. Out of the three, this is the one that will be commonly asked. When can we consider a customer as a major customer? Okay, the standard tells us that if revenues from transactions with a single external customer amount to 10% or more of an entity's revenue, then the entity shall disclose that fact, the total amount of revenues from each such customer, and the identity of the segment or segments reporting the revenues. Okay, but we are not required to disclose the identity of the major customer, only information about the revenues from that customer. Okay, so very important. We have another 10% here. This is a common question for PFRS 8 because again, it involves criteria. We have the three 10% for the profit or loss criteria, asset criteria, and the revenue criteria. The other 10% here is in determining a major customer. If our revenues go to a single external customer or come from a single external customer, if 10% of our revenues come from a single external customer, that would be considered as a major customer, and therefore information about such fact and the revenues coming from such customers should be provided. Okay, so that would be all for PFRS 8. Remember the 10%, remember the 75%, and remember the 10% criteria for a major customer. Remember what function is performed by a chief operating decision maker, and who are commonly classified as a chief operating decision maker, which is our CEO or our COO. Okay. So that would be all.